Yes, I have the man of the moment, Mr. Romesh Sobti of IndusInd Bank. Mr. Sobti, good afternoon. Thank you for joining us. Mr. Sobti, for journalists like us, I think it's an habit that before we start our Q&A session, we have to compliment and really compliment you on your consistency. Another quarter of predictable, strong and decent growth.
Thank you. I think we did see a very robust top line and operating profit as well. We have never seen, I don't remember in the last 2 years whether we saw a operating profit growth of 37%. But we're very happy that it's pretty secular in terms of the revenue side, because interest grew nicely, almost 31%, and fee grew even better. So even if you exclude trading gains, which normally happen in the fourth quarter for all banks, even then I think our fee growth was very handsome at about 29% or so.
So Sobti, how come there has been no effect of demonetization on your numbers? I looked at your Q3 numbers. Now we are analyzing your Q4 numbers. Demonetization was supposed to slow down the economy, but it has not impacted your earnings whatsoever.
Yeah, see, there are two elements of demonetization, and one has been very beneficial, and that is the flow of liquidity, the low cost liquidity that happened. So you see, in this quarter, our SA growth was as high as 57%, and overall CASA growth was 43%. So that's the beneficial part of it. Now on the flip side, of course, there are some parts of our business, vehicle financing and of course a little bit of the microfinance, is not a large book but still there, where disbursements have suddenly slowed down. So that pickup is now happening. We are certainly seeing in April, for instance, better traction on the vehicle finance side, and slowly the microfinance is picking up. So it was not that we were Teflon coated and there was no impact, but I think the recovery from the impact has been pretty rapid.
Mr. Sobti, I'm going to take a leaf out of your press conference, and where you said that you are open to inorganic opportunities, microfinance growth makes sense for you. Now you'll appreciate my curiosity. Markets are speculating about IndusInd Bank buying Bharat Financials. Now this is a forum where I would request you to either say yes or no.
Well, you'll never get that sort of an answer. What we have said formally also, and I would repeat that, is that we are looking at all these opportunities. The name you mentioned is not the only name that we are looking at in that particular industry. There are more names that are there. The sector interests us, but whether we have interest or not, I think the ultimate decision is based on clearly two criteria. It has to be ROE and earnings accretive to us on day one, and that's why valuations are very important, this thing. And then does it give you any form of specialization or domain sort of leadership? If it fulfills these criteria, we are open to looking at them, but we will not do any deal at any cost. It has to fit the bill in terms of accretion to our bottom line.
I respect that, and that is what I've always admired about IndusInd Bank, that you've never ventured into broking or insurance business, which were largely cash guzzling business at the initial part of the cycle. Since you mentioned that you are in active conversation with not just one but several microfinance companies, is anything in the advanced talk? Are you talking to microfinance companies in the non-listed space as well, or you're restricting your negotiations or dialogues with only companies which are in the listed space?
No, see, there are some very small ones, maybe unlisted. So the space, we go across, whether it's listing or non-listing, that's not really the issue. Which one really makes sense to us, that is more important, and not the... And size, of course, is important. If you really want some sort of a domain leadership, then size is important. But having said that, we have not reached even a stage that we would take one of these proposals to our board. We have not even reached that stage.
Can I archive this statement that as of now, there is no proposal on the board to acquire a microfinance company, and whatever markets are speculating, I mean, that is baseless speculation?
Yes, absolutely.
Okay, thank you for that clarity. Now my second follow-up question is that your book size has doubled in last 3 years. Some would argue that that has happened largely because of a lower base. Will the base effect kick in, or are you confident of doubling your book in next 3 years as well from these levels?
You know, we have over the last 2 planning cycles, and each cycle is 3 years, we've doubled the bank. But we've defined the doubling. The doubling is in terms of number of branches, number of clients, and profit after tax. So this 3 year, which is ended in 31st March, we also doubled all those things. Profit went up from 1400 odd crores to above 2800 crores. Clients went up from 4.5 to 9 million customers, and branches doubled from 6 to 1200. In our planning cycle 4, which starts 1st April, which we've already presented to our board, and which we will articulate a little bit more in the investor interface that we have this afternoon, we are saying that we will again double the bank in terms of number of customers and in terms of the net profit, but not necessarily the loan book.
So what would be your loan book guidance for next 3 years? Because you've spoiled the market with consistency, and markets expect that the consistency will continue in future as well.
Yes, I think there is a good degree of confidence that the loan book should grow in the mid-20s. Quarter 4 was stronger than we thought. It came out at 28%. So I think there's a great deal of confidence given the diversification of our loan book, consumer, retail, within consumer, non-vehicle, vehicle, within corporate side, S of SME, M of SME, large corporates, public sector. Given all that, I think we should be able to grow in the mid-20s over the next 3 years as well.
Now, you've made small inroads in inorganic pockets, general insurance. You bought into a depository. Are you looking at some of these niche segments which otherwise markets don't focus on, and these segments can then be nurtured and they could be nursed into big pockets of growth for you?
Yes. So if you look at in the last planning cycle, 3-year cycle, there were 2 acquisitions. One was the diamond portfolio of ABN AMRO. Clearly that gave us domain leadership, which is one of our criteria, that does it give us domain leadership and specialization. And clearly it added to our ROE, ROA and earnings. And that's a very good performing portfolio. The second one, which we announced about a month ago, and where regulatory approvals are still awaited, is really the professional clearing membership. So we acquired, we have agreed to acquire ISSL, which is a subsidiary of ILFS, which is a professional clearing member with a market share of almost 20%. So these niches really attract us because they either give you specialization or give you some sort of domain leadership. So that's why that theme will continue over the next 3 years as well.
But Mr. Sobti, let's be real here. The corporate credit book is poor for the entire banking sector per se. There is a tough rate war between large PSU banks and large private banks. Yet the numbers are not very impressive. We don't know when the private capex cycle will turn around. So in the light of the economic backdrop and the demand, do you think growing your corporate book will be a very challenge, will be a very big challenge for you? It will be a tough struggle?
Yeah, see, there's a couple of things that have worked for us. One, of course, we are acquiring new customers. They may be existing customers of other banks, but they are new customers to us. But more importantly is the competitiveness on pricing. And I think that the MCLR regime and the pass downs that we have done from base rate to MCLR, we've cut almost well over 150 basis points, is making us on the tenor base, especially the short-term tenor base, very, very competitive. And that's why we are seeing a lot of traction on the working capital side of our businesses. And that is really fueling a lot of the new growth that we are seeing. New clients, deepening of existing clients, a little bit of market shift from here and there, and certainly I think competitiveness on pricing on the AAA and the AA names. That's giving us a longer runway in terms of the corporate book.
But in general, what is your view on the economy? Because bankers, they first need to take a view on the economy and then they decide lending. If you're bullish about the economic prospect, you will lend aggressively. If you're feeling otherwise, if you're slightly bearish or cautious about the economy, bankers, they don't tend to lend. Are you feeling optimistic, confident, and are you likely to, go aggressive with your lending?
No, see, whether it's good times or bad times, we have never either been aggressive or, regressive. We've grown in the mid-20s. We always believe that, bad debts are created in good times. So even if we're thinking the good times are coming, it's not that we are going to press the pedal. But overall, I feel that, a lot of the bad news that could have come, whether global or domestic, actually got crunched in the last 7-8 years. And in spite of that, the economy still continued growing at a particular rate, even though it was lower. Now, with the positives that you are seeing on the macros, certainly, and also I think on the global economy per se, I just saw a forecast from IMF which says the global economy grow by 3.6% next year. I think all those look a little more positive. So there is a reason to be much more optimistic than we were, say, 2 years ago. And we certainly on the ground, we feel that business confidence, it seems, is at a new peak. So all that will add. So we are not going to be overly aggressive, but certainly we are optimistic.
Closing comments from you. You managed to grow at 20% plus when the economic cycle was not straight, it was shaky. Global environment in last 3 or 4 years has been very challenging, whether it's Greece, whether it's US or Europe. Now things are looking up both locally and globally. So can I safely say and assume that FY18 will be definitely much better and stronger for IndusInd Bank, because if you're growing at 20% in a tough year, then in a good year, you should do much better?
I would think so. Certainly, I think the operating environment looks much better. I think our ability to fund our balance sheet is much stronger today. We have a capital adequacy. We have the money. We have the fuel in the tank to actually do that. The spread of businesses is now almost universal. And as the economy picks up, we are optimistic that we will take a little piece of that pie. So FY18 certainly should look optimistic.
And Mr. Sobti, again, I'm revisiting something which is a women's market curiosity. Please pardon my curiosity. I'm archiving your comments, sir, that as of now, there is no serious MFI acquisition which is there on the table. I'm archiving that comment of yours.
Yes, my comment was that none of these are at a stage where we have even taken them to the board.
Okay. Thank you for that clarification. Thank you for your time, and I hope to see much more of you going forward.
Thank you very much. Thank you. Good day.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.